Told your whole life that it's the next logical and natural step after high school. And you've also been told that it is prohibitively. College. You've been told your whole life that it's the next logical and natural step after high school. And you've also been told that it is prohibitively expensive. College is one of the biggest investments of your lifetime, so it deserves your careful consideration and strategy. What you decide now will have a tremendous impact on your future. So think about it. Or you can just trust that I have your best interests in mind. Hi, I'm some guy. Here at Horton's Student Loans, we'll help you with the funding you need for your college's largely arbitrary price tag without worrying you with interest or credit ratings, so you can focus on the important things, like making sure you don't have any classes before 11 a.m. and that your dorm room is decorated in a way that will impress your high school self and embarrass your future real self. You'll hate them in 5 years.
It's tasteful.
You don't know anything about anything.
Fair.
One of the classes you could and should take will be economics, which will surely teach you in intricate detail about how you've been screwed here. Lots of stuff about inflation-adjusted pay increases, but it'll only make sense in the abstract sense because we've carefully designed the modern college experience to insulate you from real financial responsibility as much as possible. Everything about college is designed to trick you into thinking you're an adult when really it's closer to adult training wheels, or to put it more bluntly, bull to keep children safe. Your one student loan, which you won't have to start paying or even look at until you graduate, covers your housing and most of your groceries, so you won't need to learn how to budget for these fundamental human necessities until you graduate, can't get a job, and your parents start charging you for both.
No, when I leave college, I'll have a high-paying job. I mean, that's what you're paying for when you go to school. You're buying a degree that makes you qualified for a good job.
Well, that's what I've certainly convinced you is true. In reality, the national student loan debt is at $1.2 trillion, which translates to a whole lot of fancy graduates who don't have jobs that can actually pay back the loans we forced them to take out.
But it's possible. I mean, both of my parents went to college and they're not in debt anymore.
Don't bother asking them for advice. When they were in college, they could pay for it with a summer job. That'd only be possible today if your summer job was being Elon Musk. The new reality is that it's almost impossible to make student debt disappear, even if you go bankrupt. I still don't know how I managed to pull that one off.
Are there loan companies that are better that I can choose from?
No. The government decides what companies you borrow from, and then your debt can actually be sold multiple times to different organizations beyond your control, and they can do whatever they want with your debt.
Hey, I just bought your debt, and I'm gifting you the opportunity to put off paying for 6 whole months. As a side effect, you'll be paying for literally 50 years, but hey, time is money, right? Yep. I wouldn't know. I didn't go to college, seemed expensive. My dad gave me this job. Bye.
Of course, it's not like this money's wasted. It goes right into the school's endowment, which is used to pay for things like tuition assistance and fellowships, but mostly to play the stock market. In 2014, Yale's $26 billion endowment made almost $500 million in hedge funds and put just under $200 million of that towards its actual students. So your tuition dollars are making America's 1% rich even before you graduate. Hey, you're not so unprepared for the real world after all. Hey, thanks for.
And there you have it. So another honest ad. And this time we're talking about college, which, I mean, I think y'all probably already know this already, but I mean, the reason why college costs so much is just so certain people can keep money in their hands. But this is another way that they can use society just to create more debt. So yes, welcome, Bolster Crypto here with another amazing stream coming up ahead. And so today we will be talking simply about on-chain analysis. And so we'll kind of get into that with a little bit more detail. But before I let this thing go, college is, because I went to college. College, it was an interesting experience. You definitely learned some things. I think time management especially, myself being a student athlete, having to go between school and athletics and making sure everything was on point. So, definitely there's some value in college, but I think a lot of people waste college. But when you have to pay full price for a college, that, you have to ask yourself, at the time you're 17, 18 years old, and you're essentially taking on 60, 70, 80, in some cases, $100,000 worth of debt, but they won't even give you a $1,000 credit card. So what kind of sense does that make? But like they're right. It's all in a sense to basically just make money off of people by selling them hopes and dreams. And as you can see, most people that graduate college, they're still like, oh, snap. Like, oh, I forgot I had to pay this loan back. And then when they got to pay it back, they pay it back for a very, very long time, because as prices increase, the living expenses increase, it's going to make it very hard for them to stick with those payments, because there's like, oh, snap. Well, hey, I have a family now. I have, kids, or, I have this other thing that I have to take care of. Like, all of this stuff is really meant to handcuff you into just staying in the system of debt. That's it. Homes, college, those are the two biggest things that were the propaganda for ever, right? Hey, you have to go to college to get a good job. Hey, you have to have a home, which there's other ways to do it, right? There's other ways to do it. But they know it's like these things are the biggest straps of debt that they can basically unleash on the people. And that's what they do, and they make it easy. And that's the thing. Like, here's the thing. Anything worth having a lot of time is not going to be easy. So what do they make really easy? Like getting a whole bunch of debt, believe it or not. Like they make getting debt for college easier than getting approved for a car. So that's why I say, when they're giving out handouts, it's never really a handout. It's really a, hey, here's one hand, and on the other hand, I got a hammer, and I'll just keep beating you in the back of the head without you even realizing it, for not just a year, 2 or 4, but 10, 20, hopefully 50 years, you'll be paying this debt off. And that's what the goal is, for us to borrow money for long periods of time and pay the interest that they create out of thin air. That's it. So with that being said, I think the value of college can be learned in many other ways and avenues. I think maybe even doing something like going to a junior college or community college, doing 2 years potentially, and paying significantly less and getting some of the hard skills that you may need, and then maybe going to do an apprenticeship or getting actual real field work. I think that's more valuable. You'll save a lot of time, you'll save a lot of money, and most likely you'll learn just about the same amount of stuff. So there you have it. Yeah. And I agree. It's a scary one. Like, and as a young kid, you're just trying to get away from home. You're just trying to live your own life, your best life. But you don't realize that it is one of those ways to where, yeah, you go to school, but most people in college aren't even focused. Like, you'll be surprised. Like, there's a stat, like most people that end up, taking these loans, a lot of them don't even finish. So imagine that. Like, imagine, that might be your story, but a lot of people go to college, don't even finish, and don't even, get what they were going to get there, or get what they were there for. So, with that being said, there's always that risk. So make sure, if you're saying, hey, I want to do college, I would say go with the STEM route. So some type of science, technology, engineering, or math. Anything outside of that, like the liberal arts or the social studies or the counseling or the teachers, like, maybe something medical, right? If you want to be a doctor, lawyer, but even that, man, like at the end of the day, you gotta ask yourself, do I really want to be a doctor or lawyer? Because then you got to do 8 years? And that's probably double the debt. And so it's a slippery slope. I think there's many ways. I'm always been an advocate of entrepreneurship. Entrepreneurship is not easy, but at the end of the day, it's you getting it out the mud because you created that value, not them selling you a dream, saying like, hey, you'll get a high paying job because there's value there. It's like, from what I've seen, they'd rather pick someone that actually has a real skill set versus the degree. And you can definitely see that in an interview. So, it's a lot of fugazi stuff out here. But without further ado, how y'all feeling? What else we got in the chat? Training us to voluntarily handcuff ourselves. That's actually a great way of looking at it, because they're presenting it as a gift. But for most people, you ask them what is the biggest stress that they have on their lives, is just simply having to pay expenses that they're just like, man, I'm not even benefiting from this expense anymore. And that's like I think that's the kicker. Like, really, it's just like, especially like even car loans and all that kind of stuff. You're just like, that new car feeling, like you get a new car, for example. I enjoy cars, but like I really started thinking about it more and more. It's like, hey, you get a new car and that new car smells good, and you're enjoying it, you're driving it. But the feeling of that new car and like being in it, it fades away. Like give it 3 months, 6 months, or a year, but it fades away. You're just like, okay, well, this is just like any old regular car. But then that's when you start to realize, oh snap, what's my payment for this again? Oh, what, $1,000, $900, or whatever. And we all make mistakes, We all have these times of like, yeah, I probably shouldn't have, kept that expense, or hey, this is probably out of my wheelhouse, and that's fine. That's a learning mechanism, But it's just like, yo, why does this stuff have to be priced so high? Why are the margins? Because people got to realize the margins for this stuff is ridiculous. For college, you just heard them. Yale, they have like a $26 billion endowment that a portion of that they just invest every year just to make money. Like it's not even really meant to help the students and all that kind of stuff, like they say. So it's just like we're literally going into their Ponzi essentially. And then same thing. Then we have to go be a wage slave to pay it off, because that's the definition of like slavery. You have to do this, or else, things ain't gonna go good for you. Now it's not like physical slavery, but it's just like, yo, this is what really, really keeps people from being able to enjoy the life that they want, have the time freedom that they may want, because they have to stay all day at work to pay all of these expenses that they got tricked into having, really. Or they were just naive at first. They weren't informed enough to say, hey, maybe there's another way to go around this, because it's kind of getting shoved down their throat so much. And that's what happens, So with that being said, hey, if you got, someone that that's considering college in today's time, in today's terms, have a nice conversation with them before they do it. Like can we learn this stuff outside of going to a 4-year university? Hey, can we potentially, go volunteer, first of all, in the field of work that you like, and actually see if you really like it? Because I remember when I was in college, I remember a lot of people around me, they were changing majors like 2 or 3 or 4 times. So you really don't even get the value of the 4 years if you're splitting it up, trying to choose a new major every single year. So that's also cost opportunity right there. So, I know I'm ranting on college, but yeah, like I said, the reason why I'm playing these videos is a lot of the stuff that they present is not really meant to help us. It's really meant for us to be caught into the system and for them to keep control. That's it. So let's talk about today's stream. So today's stream is about on-chain data. I love being able to get a good qualitative and quantitative look at on-chain data. To me, I think it gives another aspect of research to anyone who is looking into markets, but especially cryptocurrency. I also think that on-chain data is one of those things that, hey, if you understand it, you can wield it and use it as the power to help you be a better risk assessor. And simply what on-chain data is being able to look at the network or the blockchain. And typically we're using Bitcoin and Ethereum as our proxy, because they have the most data that we can verifiably track. They have the largest networks, but simply we can look at the network and see many different metrics to help us understand, hey, how do people like to spend their coins, or how do people essentially like to buy at certain time periods or sell at certain time periods? What is their cost basis? What are some routines, or what are some signal patterns that people that are short-term holders have versus long-term holders? There's a lot of different ways that we can look at this. Using something like the NVRV to look at, typically like some long-term support, and using standard deviations above it to see, hey, when things are overheated. Like there's a lot of things, and it's simply because we can see when everybody transacts on the network, and then we can look at these metrics, things like the fear and greed. So all of this stuff is pretty good. Today, I want to just do like a basic look. I'm not going to get into like the minutia of all the complex stuff, because yes, this stuff can get very complex. But I would say really I'll take, maybe about 20 minutes, 20, 30 minutes, some of my favorite ones, especially for beginners that I think are super easy to understand, to really let you know kind of, hey, maybe how things tend to go within these cycles, but then also, hey, where we may be in the cycle and how you can take advantage of certain things that are going to be happening in the near future and in the long-term future. So without further ado, let's get into it. I think first we got to check Bitcoin though. Got to do that. So let's rock and let's roll. All right, so we got a couple things. Let's actually trek over to Bitcoin first. So Bitcoin. Now I have this on, let's go ahead and put this on a daily chart. We can take off this indicator here for now. So I think the biggest thing is to see is like, hey, this is definitely very toppy. in terms of the structure of this movement because of the easy and fierce rejection that we got once we hit 49K. And so if you really want to look at this, anytime that we see, like basically a flaggish pattern, so I mean you can kind of draw it out. There's opportunities of the flag. Either you break up, but it's clear to see that, we broke down. So that's just 101 basic TA, just looking at structure. Now, outside of that, one thing that you'll probably notice is the volume is going to show that it's dwindling down as well. And so let's kind of get rid of these squigglies real quick. So the volume is dwindling down, but then if you just kind of, and also look at Onchain, there's just a lot of sell pressure here. And a lot of this due to people getting out of that GBTC trade where they're able to buy it at a severe discount. Now that it's kind of reached somewhat of a parity to spot price, they're up big. And now, once GBTC was converted to ETF, now those coins are now unlocked and they can just go ahead and sell their position if they like. And that's kind of why we experienced, like, especially this big candle on the 12th of January. So, but outside of that, like, one thing that we can definitely see, if we were to, just like I said, just do some easy, quick analysis on momentum, we can see that on the daily chart, and this is looking at the MACD, the momentum in green here to the upside, we had that for quite some time. We got a big influx of capital here. And as you can see, the moving averages definitely pulsed on top of the midline for quite some time as well, since really, we crossed that midline all the way back in September. So we had bullish sentiment since September. But same thing is you see decreasing inflows, right? And increasing outflows. And so the outflows, especially over this last week, are much higher than what we've experienced over the past, 3 or 4 months. So it's like a wave. I always explain this when kind of looking at any asset in this movement. It's like once you have a swift up pace in liquidity, at some point you've got to have some type of regurgitation and mean reversion. So it's like a wave. A wave comes in pace, typically with a similar pace, or it could be a drug out pace. You're going to see some type of profit taking and the wave kind of going back, meaning, in this case, price is going to come down. And so it's kind of easy to kind of see how we're now crossing the midline to the negative side. And typically, this happens periodically, but these are the moments where we may have, 2 or 3 weeks, who knows, maybe like a month, potentially in a bull run. We'll just see how long a dip may last. But these are the opportunities that you kind of want to take advantage of, look around, see what you like, and consider doing a DCA versus trying to chase a top. Like all of that hype stuff from the ETFs has now waned down. And then now you can check yourself emotionally and say, oh, okay, cool. Like I see what's going on here. So a couple things. Let's dive in a little bit more, and we can actually look a little bit more specific on like an 8-hour chart. The biggest thing is, can we hold support? So can we hold a support currently where we're at? As you can see, we wicked down to this area of just about $40,500 a few times. The question is, if we break this, there's not much liquidity in between, there and like 36, 37K. And then so we see 37K Bitcoin, 36K Bitcoin. That means like $2,100 ETH. And a lot of these altcoins probably will have those days, like 2 or 3 days in a row, where it's just like Bitcoin is going down at pace at like maybe 5 or 6% a day. And it's a scenario that I'm playing out. It's not for sure. We'll just have to see. But you'll see these alts going down like 8%, 12% consecutively for a few days in a row. So that's like that nice, 30 to 40 or 50% discount off of the previous local high that, typically makes sense for certain coins if you've been trying to accumulate them. So just trying to talk about like the investor mindset. We pop on the Bollinger Bands, and same thing. We see ourselves really riding towards the bottom of the Bollinger Bands, pressing down. And a lot of the times, we tapped it once, twice, 3, 4 times, and we just got to see if it holds, and to like kind of get like a true understanding of the move. I would consider this move really got up and going, truthfully, not from this point, but really from this point down here in mid-October. So we look at this move here and we take that to the top. And then so currently, and we'll get all the wicks. So currently where we find ourselves is that 0.382. Like that's that first level to say, hey, we need to hold this. We need to make a stand, because if we do, all right, cool. We can continue to maybe consolidate more and then keep pressing higher. But like I said, this is looking very toppy. I'm going to be honest. And then so, what seems just to be a little bit more likely from a probability standpoint is that we come and test these other levels. So 0.5 and 6.8. And then so the 6.8 would be a fair retracement in a bull run. And that's very common. I mean, I'm talking about from the top in a scenario like that. That would be pretty, common with other, bull run retracements, 28%. So that's not anything crazy. And that's $35,000 Bitcoin. And so for $35,000 Bitcoin, we might see $2,000 ETH or maybe a tad below it. So, with that being said, anytime that we have these little retracements and we're clearly in a bull run, use them as gifts, right? These are opportunities to really keep your cost basis low. So with that being said, we can also look and see, okay, let's look at specifically, during this area, where is the volume and like where are people sitting at? And then so as you can see, like majority of liquidity, they came in and bought this top, all the hype, all the excitement. And then so like the average price of where people were buying were at about like, $42,700. But as you can see, liquidity is very low. So that means when liquidity is low in certain areas, the volatility to push through it is very easy. And then so you really don't see any buckets of liquidity until you get to like these levels here and here. And then so same thing, they kind of straddle that 0.5 and then the golden ratio. So that's kind of, if we were to just do like a nice, easy, quick synopsis, easy TA. We're using 3 metrics, and we're using the confluence. They're all kind of telling us the same thing. This is looking a little bit more bearish. So potentially over the next 2 weeks, 3 weeks, we might see an opportunity to really get some things on a nice discount. Things are on a little bit of a discount, but to get a real nice drawback and pullback, we want to see, maybe like a 25% retracement from the top. And then, like I would say, as of right now in this bull run, the biggest retracement that we've received is like a 20%. So we'll find out. I did have on, the indicator that, we kind of use here on the channel, and everybody in the Volta Crypto has access to this, is the Heikin-Ashi trend reversal. So what we can see is we have a lot of, sell signals, and this is kind of just really more so letting you know things are overheated. But on an 8-hour chart, we finally got, 2 little buy signals. So that's promising, basically saying, hey, maybe I can start to look at, things within crypto. And like I said, we're using Bitcoin as a proxy. And then I always like to double check and say, okay, well, what does the 12-hour show? Okay, the 12-hour show is coming, showing me a couple of buys as well. Now tell me, what is the daily show? Because I really wanted to pay attention to like the daily and the 3-day. And then so as you can see, this orange line here is the 100-day moving average. We're getting close. And then so that's why I'm saying, as we kind of see over the next couple of weeks, if we go ahead and break through this level, and so let me go ahead and put a price target there so we know what exactly I'm talking about. So if we break that level of about like 40,000 and some change, there's a good chance that we'll come and test the 100-day moving average. And here's the key. The key is, right, because this is like this portion, especially down here, this is the bear market. So let's go ahead and stretch that out. So the bear market was for quite some time. We're talking about since June of 2022, where we have that sideways movement. And then we finally broke through this level of 31,000. And then so now things are looking in like a nice transitional to bull market. But as you can see, anytime that we've seen a buy signal, these were the best opportunities to DCA, and it gives you plenty of them. That way, it's not just like a, hey, one shot at the very, very, very bottom and the low. No one's going to be able to predict that. But, these indicators, or especially this one, is very helpful at being able to say, hey, if you're someone that gets paid bi-weekly or once a month, this is going to at least let you know, hey, this is the bottom based on the pricing and the relative time that we're looking at this, especially like on the daily or the 3-day. We can really use this to keep our cost basis low. And we can use this for whatever asset, So you can use this for your alts, you can use this for Ethereum, all that good stuff. So particularly, what it seems to be leaning towards is that we may go ahead and come and challenge this like 40K, 39K. And that should be right around where the 100-day moving average is. So that's a quick, easy synopsis of that. Now let's kind of lean into the on-chain data. So what we can do is start to pull this up. And I like to just start at the bare bones basics. I think this is probably the easiest one to kind of really go through in terms of understanding, okay, on-chain data. And this one gives us gives us a little bit of info in terms of color. So color is always helpful to kind of visually see the different periods of time. So kind of the easiest way to understand the fear and greed metric is simply this. Basically, read the colors at the bottom. When you see red, know the market is in extreme fear. You see orange, notice that the market is in a good amount of fear. When you see yellow, understand that things are neutral, just kind of sideways choppy, no clear indication on how people feel. When you see green, things are getting a little bullish. And then when you see that blue, that means, all right, things should be ripping and running for the time being. And then so as you can see at the, the tops of these bull runs, you see consecutive months of just staying in that extreme greed here in blue. And so the interesting thing, we briefly touched it, but as you can see, we got shut down very easily. So that just kind of leans into saying, hey, we're still not in that full bull bore bullish phase yet, because if we were going to be pressing through and touching this blue, we typically would stay up there and really migrate towards like the level like 90, 95, and all the short-term holders tend to come back at this point. But typically we really don't get to a point like this until after we have surpassed the all-time highs. And so this is looking at Bitcoin. So that one's pretty good to look at. If we want to look at current times, what we can easily see is we came and touched it, but then we went straight through green and came right back to yellow. So we're back at neutral. This is a much like fair time to be considering to be DCAing, in my opinion. And 52 is not the lowest. Like I remember in the bear market, we seen signals of like 5, 7. Like that's like the deep value. But in relative terms in the bull market, I would say I would consider anything of like 40 or less is definitely something to keep in mind and pay attention to. So we're not quite down here in the dumps as far as sentiment in terms of fear and greed, but we have some drawback type sentiment as we can see, and we can see that on the chart. So let's go ahead. I would say here's another one that I think is pretty cool, and I'll maybe go through 3 or 4. Not going to try to overload y'all with information this stream. We'll leave that for another one. But another one that I think is pretty cool, because there's a lot to look at. But maybe I would say looking at just the realized profit. I think this one's pretty useful. It's pretty simple. Or let's actually type this out. Let's look at profit, percent in profit. So percent or loss. We can look at either one, percent in profit. So we're looking at the supply. So basically we're looking at, okay, of the available coins, how many of these people who are holding these coins are currently at a profit at the current price compared to when they bought it? And we notice, typically when we see like 95%, 98% of people just holding Bitcoin in particular, when we see that finally we get to these levels, that means, okay, prices are up. Like prices are up, and then they tend to stay up there for a good duration of time simply because people get addicted to like the euphoria, and the short-term holders are even in profit as well. And that's when we see readings like 99%. Basically, everyone who's holding the coin is in profit simply just because there's so much demand for it because people want to get the asset very late in the cycle. And then so we don't see readings like that until, we're in that real bullish phase. And then so we can see, hey, when do we get to that period? Here in red. All this red block is like the nice bullish phase, things ripping and running, and vice versa here in green. So think about it as like stop. Think about it green as in go, like go as in like, all right, DCA or whatever, buy. It's your choice. But this is like also letting us know like the extreme, low valuations where like we see readings of like we're only 40% of people holding Bitcoin are actually in profit. So this is typically when we see the bear markets, as you can see like in here. And like this past, bear market, like in here, where we tapped it and got down all the way to, it looks to be about like 47%, give or take, 45%. So a lot of people, more than 50% of the people are below their cost basis and either holding at a net loss, unrealized, but, and this doesn't tell us realized or unrealized, but it's just letting us know like where are they currently at. And then so as we kind of zoom into, recent time, we had quite a bit of people that, are starting to be in profit, 92%. It's not 95 or 99, but that's trending in the right direction in terms of saying, hey, we're getting a little bullish, but we're still not at that full bullish phase. But now we kind of reduced down and come to about 79%, 80%. So that's a nice little move to the downside. And so this is a way of looking at the health of the market. Are we overvalued, undervalued? And if we're somewhere in the white, typically, depending on how close we are to either one, it's like a sliding scale. The more that we're closer to the green, we're more undervalued. The more we get close to that red, the more overvalued we get. So we can kind of look at it in terms like that. So here's another good one. This is going to be just like the realized P&L ratio. So realized profit and loss. So this is like a lot of static. It's like, okay, there's a lot of stuff going on. Sometimes what you can do is put this on a smoother SMA. Let's say like a 30-day SMA. And then that kind of gives us a little bit more of a better read. And sometimes you can either stretch it out, even to like, for example, for something like this, I'd even go over a quarter period, which is about 90 days, but let's just go ahead and make it 100. So over a 100-day period, like we can kind of average this stuff out. And then so this moving average, so let me read this at the bottom. So the realized profit and loss ratio is the ratio between all the coins moved at a profit and at a loss. So this is like seeing, okay, like this is when people buy their coin at a certain price and then they actually sell it. So what was the outcome with all the coins sloshing around? Where do most people find themselves? And then so what can you see? I really love this because it's another great on-chain data metric to really say, hey, really get that deep, deep value, because you see how this stuff lines up pretty closely. A lot of the stuff is cyclical. So, 4 times in a row, like in the bear market, I'm looking at all this stuff. I'm just like, man, like a lot of people don't even know this because they don't even realize that on-chain data is such a powerful metric, because you can literally see how things are being moved underneath the hood. Like in stocks, you can't do this. Like you don't get access to be able to see who's doing what transaction, what is their profit, what is their loss. Like that's private information. But in Bitcoin, that's why, or just in crypto in general, with the ledger being fully transparent for everyone to see, this is why we can get this type of data. So if you use this data, you can have the upper hand. But really, this stuff is cyclical. As you can see, it comes down to these bear markets, and so for this P&L ratio, it comes down to like 0.4. And that's kind of how it's like, hey, this is like some really, really deep value. But you see it spends, a long time here, like anywhere between like 8 months to a year. And that's some real deep value. So this is a nice metric to kind of keep pace with. Now, we can also take a look for the upside. So at the upside, we can kind of see these peaks are not going as high each cycle. So, it would be nice to try to like put like a trend line to kind of plot it out. But if we just go off of last cycle, you kind of see this ratio hit like a nice 15. So this is essentially like a multiple of almost 30. So if I'm going from like 0.43 or like 0.5 to 15, there's a multiple of 30 going higher with the ratio. And that's like a huge expanse. It's basically saying there's like 30 times more people, which is hundreds of percent from a percentage standpoint, that are now in profit. And then so you'll see that that's going to reflect when they take those profits. So what do we find ourselves? This is just the data as of right now. We find ourselves, halfway up the mountain. And then so as you can see, at 7.5, that kind of puts us in relative terms similar to maybe like somewhere about like right here, where we could be here, or we could be somewhere like right here where things were a little bit rich early on in the cycle. But from a time standpoint, we're just kind of like past like that COVID moment from an aspect of time, measuring from happening to happening, if that makes sense. So good thing to kind of keep tabs on. Like I'll definitely be sounding the alarm, and definitely if you're thinking about it, get in the vaults of crypto, because like we talk about this and like we're on this every single day. Like whenever something pops off, whenever there's a metric that's like, hey, this is kind of hitting the prerequisite that we had talked about a long time ago, everyone in the group knows, and that way the communication is succinct, and people know what to do when the time comes. And then that's what it's all about, being prepared ahead of time. Cool. Let's see. What's another one? So you have the other version of that, which is the net unrealized profit. So that's hey, where are people with the unrealized aspect of it? Let's see. What else can we look at? Let's go for one more. So, which one can we get some value from? I know of one. I think I got one. Let's head over to the workbench. I'll show one more. Couple of favorites, just a few. Let's look at the extreme values for Ethereum. So the MVRV is nothing but taking the 200-day moving average and doing standard deviations above it. So, certain standard deviations get hit when things get overheated, X, Y, and Z. And then so those standard deviations are equal to 0.8, 1, 2.4, and 3.2. And so this is pretty dang cool. I mean, I think it's really helpful, to be honest, because what does this do? It helps us understand, hey, when are we below? So a standard deviation below the MVRV. So that's when we're below the metric or below the trend line here in blue. And that lets you know, okay, that's some nice deep value. And so you see that here in blue. Green is going to be more like that neutral. It's like, hey, this is neutral. You're kind of right there around the 200-day moving average. But then here's the other kicker. When you start seeing these red, especially in these like light orange vertical bars, that lets you know, okay, you're going now not just one standard deviations, but 2 and then 3 standard deviations above the 200-day moving average. This is notoriously known for being an extremely bullish time, but extremely overvalued time. So the cool thing about this, you see how when we see this in red, it really shows us these tops really play out in real time, in real terms. So the moment that we start seeing like little clips of orange, it's kind of, hey, our senses are up. I was like, okay, we're in the bull run. But the moment you really start to see like a flash of red, kind of start to give yourself that countdown, because we never really stay like in these red like topping periods for more than like 6 to 8 months at a time. So really kind of give yourself like that first little check of like, okay, when I see like this red flashing for like a month, considerably, or maybe 2, know that, okay, I maybe only have 4 to 6 more months of this time period. And then so it gives you a wide basin to not try to pinpoint a top, but to do it over a span of time. And so that's, any educated investor will tell you that's the more reasonable and more realistic way to do it. So yeah, this is pretty cool. And then so if we want to read this, so it says this chart presents the MVRV ratio with key levels considered historical, aligned with cycle extremes highlighted, as we just talked about. So the approach is to calculate the proportion of the days through history where the MVRV has traded below or above these levels. For example, if the MVRV has only been below a particular level for 10% of trading days, this means it has been above it for the other 90%. Okay. So making the scenario more likely. So the following extreme values are shown. So here's the percentages. And this is the kicker. So when you see the blue, that's representing extreme lows. And so the MVRV has been below 0.8 for around 5% of all of Bitcoin's trading days. So when, like what it's saying here, like when you see this blue, only 5% of the time has it ever been that much on discount. Is how you can say that. The other 95% has been higher price. So that lets you be able to assess risk. And so you kind of go from there. So getting low, getting high, getting extremely high. So, if you have the MVRV has been below 1, that's typically about 15% of trading days. That means 85% of the time prices are higher, or with the ratio, like, things are at a much higher evaluation. So here's like the kicker, like really take advantage of these blue and green choppy periods and downwards periods. And this is for Ethereum, y'all, So if you would have been paying attention to this like 2 cycles ago, you could have went and see y'all see that price right there, $258. Anywhere between 258 and 225, all kinds of like 162, like all that kind of stuff. We see a price of like 211. And even this last cycle, we just had just a little bit of that extreme, lows of like only 5% trading days was below the 0.8 standard deviation. And this is when you could really cop that $900 Ethereum, that $1,000 Ethereum. So we had that for about a month and some change. And then we had a little blip of it over here, but we were in green. So, with that 15% of the time, at a lower or getting low of the valuation, we had that for almost a year, like kind of there and back between, blue and green, a little bit of white, but mostly blue and green for all of, 2023, essentially, or I would say all of 2022 towards the back half and a little bit of 2023. So on the upside, yeah, be paying attention to this metric. If you want more information, or you want to know like, hey, how do I really understand this stuff more? Hey, think about hopping into the Vaults of Crypto. Link is at the bottom of the description. And we go through this stuff continually, but especially in more detail and all that good stuff. So yeah, that's the on-chain data. It's showing us the same type of thing as what the chart is showing us. Really good info. Really good info. let's see. All right, we're coming up on that 40-minute mark. So this is going to be just a chill, laid back stream. I think I'm going to have a little bit more of a complex stream in terms of like on-chain, maybe a few months from now. I'm really reserving a lot of that good sauce, for the people that are subscribed in the Vault of Crypto. But yeah, definitely things that you need to know. Trust me, like this stuff is helpful, but also being able to understand it is even better, because just looking at lines and it's like, oh, what the heck are these metrics? And like, it's cool if somebody tells you, but for you to understand for yourself is the key. So yeah. Gotcha. DCing as well. There you go. Like, doesn't it feel much better doing that now versus like when everybody's like, oh my gosh, this thing's going up, you got to hurry up? It's like, nah, like that's always a sign. Just kick back. And the opportunity will come to you instead of you chasing it. So you're on the right side. You're definitely on the right side. So cool. Yeah, college debt, another thing that we just got to look out for. Look out for the traps. But no, crypto, we're here in the right place. Got to believe it. Take action on it. And yeah, that's all I really got for y'all today. Y'all be easy. And I'll catch y'all again. We'll come back probably another day or so. But be on the lookout for the next video. Click the like before we end the stream. Subscribe if you haven't considered. Do that. And do all the good stuff that you feel is going to be helpful for you to go to where you're trying to go with your endeavors within crypto. Peace.